Are you wondering if putting your savings into investments in 2024 could lead to better returns than you think? In today's video, we are exploring the truth about saving and why it might be holding you back from financial freedom. Many people think saving is the best way to stay safe financially, but in 2024, low interest rates and rising prices can actually make your savings worth less. Don't go anywhere. We're about to explore 3 powerful investment strategies that can help your money work harder for you. Let's start with the hidden costs of saving. Many people see saving money as the safest way to secure their financial future, providing a sense of safety and peace of mind. However, with interest rates on savings accounts remaining lower than inflation in 2024, the real value of savings is actually decreasing. For instance, if you save $1,000 today, it could be worth only about $970 in real purchasing power next year due to rising costs. This situation highlights a critical issue. By just saving, you may be losing money over time. The rising prices of everyday items like groceries and housing mean that your savings don't stretch as far as they used to. As inflation continues to outpace the growth of savings accounts, many may find it harder to maintain their lifestyle or make significant purchases. This emphasizes the importance of financial knowledge and exploring better investment options, such as stocks or real estate, which can offer higher returns. Ultimately, while saving is essential, relying solely on savings accounts can be misleading, urging individuals to seek ways to truly protect and grow their financial future. Now, what is the power of compound interest? Investing is a smart way to grow your money, and one of the best parts about investing is something called compound interest. This means that your money can earn money on itself over time. Instead of just earning interest on your original amount, you earn interest on the interest that has already been added. This can make your money grow much faster than you might think. The sooner you start investing, the better your chances of seeing significant growth. For example, if you invest $1,000 at an average return of 7% per year, after 20 years, that money could grow to about $3,869. This shows how powerful investing can be. What starts as a small amount can turn into a lot more just by letting it sit and grow. Additionally, regular contributions can boost your growth even more. If you add $100 every month to your investment, your total amount will increase significantly, demonstrating how saving a little consistently can lead to big results over time. Up next, why diversification reduces risk. Protecting your money when investing is vital, and diversification is one of the best strategies to manage risk. Diversification involves spreading your investments across different asset types, such as stocks, bonds, real estate, and commodities, to reduce the impact of any single underperforming investment. For instance, if you invest solely in stocks and the market drops, your portfolio could suffer significant losses. However, with a mix of assets like bonds or real estate, you may still see gains that balance your overall returns, providing greater stability in uncertain times. Beyond managing risks, diversification helps protect your wealth from inflation. While keeping all your money in a savings account may feel safe, low interest rates often fail to outpace rising prices. Over time, this reduces the purchasing power of your savings, leaving you with less financial security. By investing in diverse assets, you create opportunities for growth that can outpace inflation and enhance your long-term financial health. A diversified portfolio doesn't just mitigate risks, it also positions you for consistent, sustainable growth. Different asset classes perform well under varying economic conditions, offering a buffer against market volatility. Stocks might excel during economic booms, while bonds or real estate provide stability in tougher times. This balanced approach protects your money while working to secure your financial future, making diversification a cornerstone of any successful investment strategy. Why investing prepares you for the future. Life is full of surprises. Unexpected costs like medical bills, car repairs, or urgent home repairs can arise when you least expect them. These unplanned expenses often bring stress, especially if you're not financially prepared. While a savings account is a great starting point, relying solely on it may not be enough to keep up with inflation or build the safety net you need. By choosing to invest your money, you allow it to grow over time, creating a robust financial cushion to handle emergencies. This proactive approach not only helps you manage sudden challenges with greater ease, but also builds your confidence in making sound financial decisions. Moreover, investing isn't just about handling emergencies. It's a cornerstone of your long-term financial health. This is especially true when it comes to planning for retirement. Depending entirely on Social Security or a pension might not provide the financial security or lifestyle you desire after you stop working. By starting early and investing consistently, you can take advantage of compound interest, allowing your money to grow exponentially over time. A well-planned investment strategy ensures that you're not only prepared for unexpected expenses, but also on track to achieve your financial goals, like buying a home, funding education, or enjoying a comfortable retirement. Ultimately, investing isn't just about building wealth, it's about creating a life of financial security and peace of mind, empowering you to navigate life's uncertainties with confidence and focus on the things that truly matter. Let's now check the accessibility of investing today. In 2024, investing is more accessible than ever for everyday people. With numerous online platforms and user-friendly apps, anyone can start investing with as little as $10. This opens the investment world to individuals from all backgrounds. You don't need a finance degree to begin. Ample research and educational resources are available to guide you in making smart choices. Technology has equipped potential investors with tools to understand market trends, assess risks, and explore various assets, simplifying the creation of personalized investment plans. Now let's explore 3 reliable investment options. First, investing in the stock market can yield high returns, particularly with well-established companies or index funds, which historically average returns of about 7% to 10% per year. Diversifying across sectors reduces risks while benefiting from market growth, making this strategy especially effective for long-term investors due to the power of compounding. Second, real estate is a strong investment choice due to its potential for value growth. Investors can benefit from rising property prices and earn passive income through rentals. Real estate often outpaces inflation, making it a solid long-term investment. With the rise of crowdfunding platforms, even small investors can access this market, enhancing its appeal. Finally, ETFs, exchange-traded funds, offer a popular, cost-effective way to invest in diverse assets without significant upfront capital. They provide instant diversification and are easily traded on stock exchanges. Many ETFs track specific indices, allowing investments in broad market trends while incurring lower fees than traditional mutual funds. This flexibility and affordability make ETFs attractive for both new and experienced investors seeking a balanced portfolio. Warren Buffett, CEO of Berkshire Hathaway, exemplifies how investing surpasses saving. He focuses on buying undervalued companies and holding them long-term to harness compound interest for wealth growth. Buffett advises diversifying investments and understanding your purchases, emphasizing the importance of financial knowledge. His success inspires others to invest for a stronger financial future rather than merely saving. If you found this video helpful, make sure to hit that subscribe button and join our community for more insights. In our next video, How to Start Investing in Crypto Safely in 2024 for Beginners, we'll break down the best tips and tricks to help you dive into the exciting world of cryptocurrency without the risk. You'll learn how to pick the right coins, manage your investments, and avoid common mistakes.